Good afternoon, everyone. And it's exciting to be here on Small Business Week. So happy Small Business Week. We are here today with a collection of different voices in the fintech community to talk about how small businesses or how fintechs help small businesses. And it's an array of different companies and products that we'll all try to amplify, because what we are seeing is digitization has happened in financial services, but especially with small businesses. And there's an incredible amount of tools that are in place to help, but also to help not only actually accept capital or get access to capital, but also an incredible amount of tools to help on the back end, to help in the office. So I want to walk through with a couple of different folks here that we have today, talking through about how fintech is really impacting small businesses to be able to help them grow, to access the capital they need, and to be able to have them functioning incredibly well, propelling them for greater success. So today we have with us Luke Voiles, CEO of Pipe, Erin Archuleta with Block, and she's also a small business owner herself, so she can tell you about the trials of starting her own business. Erik Rettig with Intuit, and Grant Hanna with Bluevine. So want to start off with you today, Luke. You've now been at Pipe for a little over a year and recently have launched a new product, what you are calling within Pipe, calling CAS, Capital as a Software. Um, you've come from the background, you've come from Intuit, you've come from Square Capital. Curious to see kind of what you saw, what you were seeing in the marketplace, maybe a gap or two that you were seeing that you were hoping that Pipe will fill.
Yeah, I think fundamentally it's the number one pain point for small businesses, right? Which is access to capital. It's just a super challenging problem for the micro merchants, sometimes sole props that have maybe 100,000 in revenue coming in to get access to capital. There's a huge gap. So I think my experience at Square is on point here, right? Like Square does an amazing job, and I'm still not going to call it Block. Square does an amazing job of like serving that micro merchant population, right? With the merchant finance product, and it's just a unique data setup to be in the flow of the money and to have a perfect data set to serve a population of customers that nobody else serves. Yes, Square can do it for their own base, but many of the other payments facilitators or PayFacs can't. It's just hard. Lending is really, really hard. There's fields littered with with failed lending companies over the years. Every cycle, several more go down. And I wouldn't recommend any payments facilitator or software company that's focused on small businesses to try to do that specific type of embedded financial services. Payments, maybe, but lending is really hard. And some of the other embedded financial services are really tough too. So there's just all these businesses, whatever software they may be using, they may use QuickBooks in the background, or they may be using Square, but like all of these businesses are starting to use verticalized software. And for Pipe to now enable any of those verticals to offer a full suite of embedded financial services, I think that's the goal. We want to fill that gap to make sure businesses have access to financial services.
And Erin, as we alluded to, you are a small business owner and was curious, oftentimes we think, especially within technology or fintech in particular, it's all about funding these incredibly high growth, venture-backed companies that are going to have massive scale, but you are more on what we normally think of as small business in the restaurant business and others. Tell us about your pain points with capital and how Block Square has helped you in that journey.
Yeah, thank you. So my husband and I formed our catering company back in 2006. And at that time, we actually had to personally collateralize a credit card terminal. We could not get a credit card terminal from the bank because the restaurant industry was too unproven, we were told. And so we really have grown with fintech tools over time since then. We've scaled into multiple restaurant properties. We use Square as our point of sale, and we use QuickBooks. I know, Erik, you'll be talking soon on our back end and that integration. And so those tools really give us a real-time snapshot of how the business is performing. And those embedded fintech tools, like my dashboard with nightly sales, my ability to anticipate payroll, my ability to see multiple locations at one time and make real-time decisions in the moment that frankly affect my business long-term, are one sense of cash flow, right? But then there's this other piece around being able to be creditworthy, as we were just chatting about. So over the course of the years, we've accepted 3 Square loans. Each supported us really differently. Our first loan was when we made the jump, and I think this is a small business story that many folks resonate with. We jumped from 400 square feet in our restaurant, tiny, to 2,500 square feet, which for us was enormous. And so making that jump meant that we needed someone to believe in our ability to support that kind of growth. And so we were able to pay back that loan through our sales in a way that worked for us as we grew. Then the second time we took a loan, we were based in San Francisco. And for any of you who have visited, you've seen the hills. There was a giant water leak uphill, and it was slowly trickling downhill under our restaurant. We did not know. One day we turned around and our dishwasher, Ricardo, fell through the floor, and he looked at us and said, "It's time to replace the floor." So that second Square loan really allowed us to respond quickly in a moment of, I would say, design disaster, and allow us to get back open quickly. And then the third loan allowed us to pay our staff during the pandemic. And so in each instance, we had the flexibility, and fintech had the responsiveness to meet us where we were and to meet our need. And now most recently, we've opened in Flint, Michigan, in my hometown. And with our small quick service restaurant there, we actually tried to go the traditional lending route, and we were told for a small dollar loan that we needed to capitalize with our home. So for us, we continue to lean into fintech resources that are quick, that are responsive, that are knowledgeable, and that frankly meet us and not provide an outdated model or burdensome requirements.
Amazing. And I think your case point in particular, especially through the journey from 4 different use case scenarios of that. And Erik, at Intuit, you've been referenced on the QuickBooks side, but you have a whole suite of tools that really do help, some both from not only access to capital, but also in the back end. And recently Intuit has started what you all referring to as the Small Business Index, to kind of give an overall sense of the health of small businesses in the United States. Would love for you just to talk through a little bit about the index and about some of the tools that might not be as front and center that Intuit helps to help make small businesses succeed.
Yeah, happy to. And first off, thank you, Penny, and thank you, FTA, for hosting this important conversation. Thrilled to be here with such a strong group of small business advocates. So I lead our policy and advocacy for QuickBooks here at Intuit. For those who don't know, we're a global technology platform that helps our customers and communities overcome their most important financial challenges. We serve about 100 million customers through TurboTax and Credit Karma, and then about 10 million small businesses and self-employed individuals through that QuickBooks and MailChimp products. Our customers are typically smaller and newer in the life cycle, and they face a lot of these challenges, day in, day out. And so, to your point, Penny, I want to take a moment to just go ahead and ground us in the data. So, one of the major pain points that we discovered in looking at ways to best inform this small business economic trends for small businesses, but also policymakers, was there's just a lack of timely data for small businesses with 1 to 9 employees, the smallest of the smalls, right? So that's why over the past couple of years, it's been a labor of love. We've embarked on a couple of data initiatives. One, we launched last March, the Intuit QuickBooks Small Business Index, which you referenced. And this is a new monthly measure of small business employment and hiring in the US, Canada, and the UK. And we developed this in partnership with a leading economist, Professor Ufuk Aksajic, and he's from the University of Chicago. So each month, the index will show the total number of people employed by small firms with 1 to 9 employees in the previous month and monthly growth rates. So what this means is that each month we'll be able to see if there has been a growth or a decline in the number of people who are employed by small businesses with 1 to 9 employees. And because we're using anonymous data, from QuickBooks Payroll, its data insights are available 7 to 9 months earlier than those official statistics that can be kind of stale by the time you receive them. So we've begun to package up this data. We're really excited about it, but by quarter as well, so we can take a look at those quarterly trends. And our hope really is that by shining a brighter light on small businesses with timely insights, we hope to increase small business growth and success rates. So lastly here, I'll get into what we're seeing. So everyone knows the value of small businesses to the economy, right? They're 98% of all US businesses. 77% are firms with 1 to 9 employees. But what we're seeing is despite the record number of new starts that we all saw in the pandemic, small businesses are not becoming actual employers. So we had a rise in those small business applications of around 5 million or so in 2021, 2022, and 23. And yet we need new businesses because new businesses create jobs. In fact, they create jobs 23 times faster than businesses 10 to 15 years old. But fewer businesses are becoming employers. So that's a troubling statistic. Only 8% of new businesses were employers in 2020. So despite a surge in 2020, the share of people working at small businesses with 1 to 9 has returned to pre-pandemic levels. Hiring at large firms is just outpacing smaller firms. Now, there is a bright spot here. So we're also seeing in our data that financially and digitally connected small businesses grow faster. So we found a direct correlation between increased use of digital tools and employment, as well as revenue growth. So for high users of digital tools, those folks are more confident about getting financing, as Luke was mentioning, over the next 12 months. And 76% of high users reported confidence compared to 58%. So I'll stop there, but it's really interesting trends. And I think we always have to ground ourselves in the data to make sure that we're serving small firms with these financial tools.
Can I just say one thing that's super interesting there? Like all this software they're using, yes, it helps them grow, but it does also make them more efficient and not maybe need 4 employees instead of 5, right?
100%.
I don't know if you guys have data on that or not. It's super interesting.
Yeah. And Grant, for you, data is the lifeblood, and we oftentimes see, this disconnect between, like Erin was describing, what a traditional bank might how they look at data and how they view underwriting, and how a company like Bluevine is able to, service over 500,000 small businesses over the lifetime of it, 10 years that you guys have been in business. Kind of how is it that you all are able to kind of provide this capital and tools to businesses that often are overlooked by traditional financial institutions?
Yeah, thank you for the question, and thank you, Penny, and the great FTA staff for hosting this conversation and wishing everyone a happy National Small Business Week. I think the best way to start to answer that question is to perhaps provide some background in context for Bluevine. As you mentioned, Bluevine has served over 500,000 small businesses in the 10 plus years that we've been in existence. We've helped deliver about over $14 billion in loans to small businesses, and our small business customers manage over $1 billion of deposits through our platform. And I mentioned a couple of different elements, both the lending side and the deposit side. And I think that's really what makes Bluevine different and what it attracts customers, small businesses, to Bluevine's platform. We offer a holistic suite of products that enables our customers to manage their finances from one place, ultimately delivering convenience and saving time, giving small businesses time back to do things like marketing, managing employees, hiring, the kind of core functions that enable growth. Time is a great equalizer. We're all time limited, and I think the fact that Bluevine can really bring those efficiencies and conveniences is what attracts customers to our platform. But I'll also mention you touched on the ability of fintech to expand access to capital and reach traditionally underserved customers, and I think that's one of the things that fintech does really great, and it's really because fintech is the technology part of it that really enables that, in being digitally native and being able to from the get-go use things like APIs to pull cash flow data to give a more expansive view of credit underwriting and look beyond traditional data factors that for too long have failed a lot of under or overlooked entrepreneurs. So I think, and I also mentioned we've been around for 10 plus years, and we have a track record of data that enables us to accurately and efficiently underwrite small business credit products. So I think that hopefully kind of gives you a good overview of Bluevine and how we're working to expand access to credit and serve entrepreneurs in the United States.
And Luke, one of the things, I mean, you heard Erin allude to it, that to get a loan, she was required to, capitalize or to have collateralized her house. And you often say that pipe is in the flow of funds, and would love just to kind of explain how that is really different and a differentiator for small businesses to be able to access capital being in the flow of funds versus having to, put up an actual asset.
Yeah, I mean, I think the difference between like micro merchant small business lending and all of the lending types is that it's just really, really hard to figure out the data, right? And so Intuit had an enormous data set to go try to figure out all of the expenses, the entire P&L of the business to try to underwrite. I know Bluevine tried to use some of that data, but something that Square did and Pipe does was just to narrow the problem and simplify the problem, right? When you look at a coffee shop and you see 1,000 coffee sales a day, and you can use 6 months of transaction history on that coffee shop to predict very accurately what the next 12 months will look like for other coffee shops like that in that geography based on the models you have. What the next 12 months looks like, you can pretty safely advance 10 to 15% of that next 12 months. And then you get paid back by holding 10% of the transactions every single day, right? That puts you in the flow of the money. So you've narrowed the problem, right? Like one of the things I learned from Scott Cook at Intuit was like all the stories about how two-sided marketplaces are really hard, and you've got to narrow the problem and like continue to, in any fintech product you're building, just narrow as much as you possibly can and focus on one simple thing. And I think this is the example in lending, right? It is, you have a perfect data set on a cash flow stream, you're lending against that cash flow stream, and you get paid back first in line on the same cash flow stream. It's a truly like special sit style risk that the capital markets actually really likes. And that enables you to open up access to capital to businesses that never had access to capital before. They don't have FICO scores, right? We launched about a month ago with a company called Boulevard. They serve nail salons and hair salons and spas. Many of those nail salon owners, especially, are Vietnamese women-owned businesses that have no FICO score, but they do $1 million to $2 million a year in revenue. They're fabulous businesses, but they just don't have any access, and they'd have to do a personal guarantee or put up their house as collateral. But with just literally only the credit card transactions, you can underwrite that business, take the risk, and move forward. You don't have to understand all of the expenses because you're getting paid back before the expenses, right? And you're only holding a small amount, so it's a very affordable loan. If they pay you back more slowly or their revenue is slower, like they say they have a down month, although I think getting nails done and hair done is pretty recession resistant. Like if they have a slow month, then they pay you less. And so it's got a built-in like friendly like workout mode, basically, where they pay you less over time. And so I think fundamentally narrowing the problem like that to the single data set allows you to open up access. And the stats speak for themselves. Like the loans match the demographics, like more to women-owned business, more to minority-owned. I mean, the Square, I know the Square stats, but I won't steal them from you. But we're seeing that. Like there's data that shows, especially in the salon industry, like 58 to 61% of the businesses are owned by women, right? Which is way more than the overall demographics for all businesses. And so it really is that narrowing the data set that really makes a massive difference. It lets you make fair and accessible capital, right?
Amazing.
And Luke hit on sorry, Penny, Luke hit on a really important point, because that's what we're seeing in hard data. And actually, Luke, was with us when our capital marketplace came about. But at any one point in time, our customers, our Intuit QuickBooks customers, were 60% of them were saying that they couldn't obtain financing elsewhere. And so that's why the marketplace came about. And Luke touched on another point just around assessing risk and how AI can help do that. I think that's a really important point because a lot of the conversation we have in the policymaking community, rightly so, is about risk and how do we make sure we bring in those underserved, underbanked folks. But AI, leveraging all these really specific data points that maybe traditional FIs or others may not have on these businesses, that just narrows in and allows them and companies like Luke to better serve these folks by taking that risk assessment and leveraging this rich QuickBooks like software accounting data, where you can really create that whole picture and profile of a small business.
And I'm glad you brought up the AI policy and policy in general. And we'll ask Erin, we couldn't be in Washington without addressing policies. We do hear a lot of noise, and some of it is misunderstanding by kind of policymakers in the field today. We hear a lot about relationship banking and community bank and want to be supportive of our banking system, but at the same time, you do have deserts. You do have banking deserts that are in there. What are some things that, when you go to meet with lawmakers, that you are trying to educate them about the relationship between financial technology and small businesses?
Sure. So really, one of the things I think that enables us is the ability to serve customers all across the country and in rural areas. I think many times people focus on what they've encountered in cities and how they've encountered financial technology in the moment in metropolitan or urban areas. But the bulk of small businesses exist out in the rural sector. And so for that, I hear you, Erik, earlier talking about job creation, Luke talking about job creation. Grant, there's no way you're not. I know we all are. But rural communities supply 54.3% of the jobs in their immediate area. And so if those businesses cannot compete with technology at the same level as folks who are in more urban centers, you're really missing a massive portion of the workforce, of the economy, and of the ability to generate wealth in pockets of the country. So I think that these tech tools, this enablement, the ability to use AI tools at the small business level for insights into your own operations and ease of operations, it matters no matter where you are geographically. And so I'd ask just to hold in mind that large capacity of small businesses.
And Grant, I'll have you weigh in as well, because you also are serving, small businesses, not just within one geographic, or demographic as well. Talk to you about kind of what you're seeing, if there's patterns or kind of where you all are hoping to take policy as well.
Yeah, so I think there's a lot of opportunity right now in the policy space to advance good policy, quite frankly, that can really help turbocharge small business growth and really ensure for the long term that small businesses are protected in the best way possible. So I'll mention a few things that I think are really important and that I'm paying really close attention to. One is, we talk so much about digital tools and the digital ecosystem that small businesses utilize and that we exist in. And that really is powered by open banking. I know this has been a big topic of conversation, particularly on the consumer side with the CFPB's recent 1033 rulemaking after a number of years kind of in the ether and in the rulemaking process. But I think one thing that's really important to put in perspective is that 1033 only covers consumers. Small businesses are commercial entities, so exist in kind of their own unique space from a legal perspective, from a policy perspective. So I think one thing we're really looking at right now is how do you extend those same protections that consumers have. In this 1033 rulemaking is going to ensure that consumers can control how their data is shared, control who accesses it, and that really that anti-competitive practices are not able to proliferate throughout the kind of the open banking environment. Obviously, small businesses deserve the same level of protections as consumers. They use open banking and fintech tools in the same ways and with the same uptake as consumers. So really looking at what is the best way to extend those same level of protections to small businesses is something I think that's really important. Another thing I'll mention really quickly is the topic of disclosure. So, I know many folks may be aware that there's no national framework, no federal framework that requires that disclosures be provided on offers of credit to small businesses. There are, of course, a number of states that have implemented their own disclosure requirements. But, I think to ensure really that there is that national framework and that all small businesses nationwide are guaranteed the same protections to really be able to make informed decisions and be provided transparency. Small businesses know what type of credit is best for them, what offer is best for them. So I think, looking at this conversation at a national level, at the federal level, I think is a really good opportunity before policymakers and before us all to engage in that conversation and hopefully move the conversation forward.
Can I just pile on the 1033 thing? Like, the only reason we're able to serve amazing frictionless experiences to all of these small businesses is that folks, like on this call especially, like treat the data as the business owner's data, right? And they let it out through the APIs. If you have the right permissions, you can consent to have your data shared. Intuit's is open, Square's is open. Bluevine, I know, ingests that data as well, like you did when you're on the marketplace at Intuit at least. But that open access to data and giving the customer the control of their own data enables for pretty magical stuff to happen. And yes, the banks don't necessarily want those things to happen because we're competing with them in some sense. So we have to be vigilant on this one to make sure it really, like, it is the customer's data. It's not the bank's data. It's not Intuit's data. It's the customer's. And if we can offer them experiences based on that data, like that's like critically important to the future of fintech, frankly.
And
Yeah, it's permissioned automation, right? And a couple of ways those show up, sorry, Penny, just in product, to give you an example, is Intuit Assist is our new Gen AI powered assistant that provides personalized, intelligent recommendations to help small businesses make better financial decisions. We also have a product in our Intuit Assist is embedded in our MailChimp product, and it helps design marketing emails and create personalized automations, right? So in QuickBooks, it shows up as reducing the work that small businesses have to do and save them time by generating, say, invoices and drafting reminders automatically. So to Luke's point, this is all there. Small businesses, I want folks to take this away today. Small businesses are leveraging AI already, but it shows up behind the scenes, as Erin likes to say, in these tools, and it's powering their prosperity right now.
Yeah. Is it okay if I add just quickly?
Yeah.
One of the AI tools that I think is most beneficial in the moment for operations for small businesses, it's exactly what you're saying. It's allowing us to make real-time decisions about our cash flow. So AI automation for appointments for businesses that book time, I mean, that's hundreds of dollars an hour that you're looking at. And that matters so much to small businesses. The way you show up online with AI photography tools, AI writing tools, the things that enable you to compete against large businesses at a small or micro level are powerful tools. Thank you. I don't want to take us too long.
Oh, and I'm so glad that you guys all piped up, no pun intended, look, that you all spoke about the use, because we do hear a lot of scary mongering and AI is this big scary tool that's taking over and we can't control, and the machine is iterating faster. The truth is AI has been used, especially in machine learning, been used in financial service tools almost from its beginning, and used responsibly, used in a way that helps not only the companies be more efficient, but the companies in which they serve as well. And so I think those are great points. I want to get to one audience question. Brian from B2B CFO. I'm a strategic advisor for privately held companies. What is the best way for me to advise my clients to capitalize the capital tools?
Go ahead, Luke.
I mean, like the way I've always described this in the past is like for us to have access, for the fintechs to be able to serve you better, you need to be using modern digital tools. You need to use Square for payments, or you need to use Intuit for payroll, or use QuickBooks in the background, or use any of the vertical softwares that Pipe is partnering with actively. That digital like management of your business opens up the door for all of this to happen, right? Like the bank transactions are one thing, but if you're actually doing a lot more and completing tasks in this software, that fundamentally those tasks can get automated as well over time, but with AI. But like using those tools to make your business more efficient and better, it starts to like organize the data in a way that's useful for the other fintechs to help serve you. Like that's the simplest way I can describe it.
Yeah, and I just add on to, attempt to simplify some of that as well. I mean, we do these, Luke knows this well, but we do these follow me homes with customers. So we see how they're using product. And one thing we hear time and time again is that customers don't want to cobble together 80 solutions like we know they do. They want one simple solution, one platform to manage it all. And so, simplify things. Of course, we have a great suite at Intuit, whether it's payroll, lending, email marketing, but we absolutely hear that simplification is key to these small businesses who are strapped for time every single day, right? And they want to do what they do best, and that's sell their product and run their business.
Yeah, I've been working with small businesses on technical assistance since 2008, and I've been at Square since 2015, and with Block now advocating for small businesses and with our policy partners. And in all of that, it's exactly what you're saying. It's, do you have a picture of where you are in your health as a small business? And one of the first things I try to instill in folks is to really make an appointment with yourself where you're investing in looking at your ecosystem, right? So I'll pull my Square payroll data, I'll look at my dashboard, I'll take my Intuit reconciliation, and I'll have a cup of tea. And I treat myself to really understanding, where am I in this moment? Where do I need help? And when we talk about how you're caring for the long-term health of your business, that data, those insights, and that technology is what helps support you. So I would just say, invest in that time, invest in those tools, bring together exactly what you're saying, bring together that suite of services and make them work for you.
I want one more anecdote that I love from Intuit. Like the biggest competitor of QuickBooks is literally a shoebox full of expense receipts. Don't do that. Like use something digital, please.
Real story. My husband had Taco Bell bags of receipts when we were just dating. And I said, oh no. And then I think that's kind of how we got married, was the conversion.
Converging Taco Bell receipts. Grant, any last words from you?
I was just going to say, I think this conversation beautifully highlights the power of fintech. When we come together, we ultimately are stronger and create better products and help small businesses in this context really succeed and become more efficient. So, I think really a critical part of offering services too is especially in the open banking context, is making sure that they work efficiently and effectively for small businesses to really bring that greater time saving, as Erik referenced. So.
And let me just ask if we all have time for one more. Lori is asking, I'm hearing the cash flow data and machine learning are powerful tools to guide lending decisions and help businesses access capital. Do fintech lenders also use digital trace data? How do you monitor for potential bias in lending decisions?
I mean, I can jump on that one. So like when you limit the data that goes in, and the way that the Square capital model works, the way the Pipe capital model works, it literally only uses credit card transaction history. How many coffees did you sell today? Right. And so if you're training your machine learning models to predict what the next 12 months looks like with seasonality, and that type of interest, like that type of business in that geography, it sometimes, it's like, if you just literally limit it just the credit card data alone, it takes the unfairness out. It takes the bias out. We don't use FICO score at all. There's so much inherent bias in FICO score because you have to have a score to get a loan. And you have to have a loan to get a score. Like Credit Karma helps people build their credit now as well, but there's so many folks that just don't have like that basic like FICO presence, or they're thin file. You can't serve them. And so if you're just diligent about how you think about the data that goes in, the data that comes out, and then do like third-party reviews after the fact to make sure that the models you're using don't spit out weird stuff, that it's unintended. It's just like having the right like process around it, and it works great. And it actually opens up and makes capital access more fair and inclusive, right?
Can I also just add here real quick? I mean, ultimately, lending decisions, no matter how they are made, are subject to fair lending laws ultimately. So outcomes are monitored. Bluevine operates on a bank partnership model. Celtic Bank is our bank partner on the lending side, and we're subject to a COA. Outcomes are subject to a COA, and Celtic Bank's federal regulator monitors for that. So I think it's really important to keep in mind in this context that there are existing protections in place for outcomes of lending decisions, even those that are used with machine learning, which, as was discussed earlier, has been used for many, many years in the financial services context.
And Grant, to your point, it's about transparency and being transparent with the data and the decisions, and kind of making sure that responsible lenders are showing kind of how they are coming to the decisions in which they are, and have that availability to be able to do that. I think which we all can benefit from.
Can we just mention 1071 real quick on this?
Sure.
Like, if we had the data, and you had to ask for the data, fintech would look amazing, because we're opening.
Luke, it's an acronym. So 1071, not everybody understands what 1071 is.
The folks I'm looking at here definitely do. Basically, it's the requirement that lenders collect certain demographic data on the underlying borrowers during the application. It's going to make Square and Intuit and Bluevine and Pipe look really good, because we actually are super fair and inclusive and unbiased. I think the banks are going to look bad, and that's why there's so much pushback on this, because they don't. Yes, it adds a little friction, but it's really going to show how fintech actually can open up access for small businesses that don't have access otherwise. And so I just want to plug that. I'm not sure everyone perfectly agrees with me on 1071, but I wanted to say it.
It's an important point, and I'd also highlight that, at least I can't speak for everyone on the call, but for Intuit, tying this back to AI, our models are explainable, and so there's an explainable component to all of this as well.
There's a model on top of the model that tells you how the other model worked and why it did what it did, called Shapley. Yes, it's great.
Exactly. Well, really want to thank all of you all on National Small Business Week to kind of shed some light, and hopefully the audience learned a little bit, not only about the financial tools and digital financial tools that are available, but the impact that they're having, and why many of these were created, and that market gap trying to fill. It is we still aren't serving all that want to serve. There are still unfortunate banking deserts that are out there, but hopefully with these digital tools that go across borders, that go across state lines, to be able to access for those that either want to do a small restaurant, go from 400 to 1200, or have a highly scalable, more highly scalable company, that they can use these tools to be able to power these incredible and keep innovation here in the United States. So with that, anyone with a last final word? If not, we will wish everyone happy.
Just shout out to all the amazing entrepreneurs and small businesses out there.
Yeah, I'd just like to wish everyone a happy Small Business Week, to the owners and to their teams, who I can't stress enough, the teams at small businesses become the next small businesses. So happy Small Business Week to all of you for making such important places in our communities.
I'll pile on. Like, this is all about the customer stories, right? Like, every single loan you make or advance you make changes the lives of a small business owner. They're able to invest in their store, or help their community, or put food on the table. Like, so the mission here really matters. Like, the goals are to help these customers improve their lives, improve their communities, all the small businesses out there. And I hope fintech can help make that a reality for many, many more businesses to come. So
I'll just echo what everyone has said, and again, wish everyone a happy National Small Business Week, and thank the FTA for this wonderful conversation.
Thank you, FTA.